Good morning, ladies and gentlemen. It's been a busy 1-2 months in Hong Kong. We have so many international events held in Hong Kong. Last month, we have the Global Financial Investment Summit, followed with the HKMNA, BIS high-level corporate central bankers meetings in Hong Kong. So it's been a busy month. In fact, I've been to many events. I lost my voice. It's been very coarse. So my apology to you all. At least that's my excuse to start off with. Now, this session under the Asian Forum is in particular importance. I mentioned about all these financial summits that we have had in Hong Kong the last 2 months, but I've been to many of them, but the topics typically is on the capital markets, central bankers, policies, but this actually, I think for the audience this morning, means a lot more because we're talking about risk management. And I hope by the end of this session, by the way, good news for our speakers, our panelists, that we will end on time. Because Chairman Stephen Siu already reminded us, Chairman Stephen said that the chief executive will be coming to this podium to deliver his keynote message 11 sharp. So I do remind you, if you want to submit your question, you have to do it now. Because I don't think we have enough time to cover every question that will be asking us. So I hope within this 1 hour, we get some good takeaway. And I hope that takeaway will be like, I hope I won't be offending insurance authority because they're my regulator as well. But the question is, we think we are the risk management center. Right? We think we are the risk management center for this region and the mainland. But are we? Do we have what we take to be a risk management center? So I expect you all to say yes. But do criticize if you can. I mean, or not just use the word criticize. What else more can we do in Hong Kong? Can the industry do? Can the regulator do? And the policy, government policy. So I think that's, I hope, is the takeaway this morning for this session. So to start off with, let me just introduce my speakers, my panelists. But the full bio is with the QR. You can download from your QR code. So I don't want to waste too much time. But we're very fortunate this morning. We have speakers flown in. Thank you to Michael BENNETT. Michael is the head of derivatives and structured finance, capital market, Treasury of the World Bank. So he comes all the way from DC. I just found out earlier that he's actually no stranger to Hong Kong. He used to live in Hong Kong. So thank you for coming back. Tony GALLAGHER, he's the regional CEO for Carpenter, Asia Pacific. Thank you for Tony. Tony, you are from Hong Kong, but still, thank you for taking the time to come this morning. Kevin Strength, President and CEO of Sun Life, flew in from Canada, of course. I know Kevin for over a decade, so nice to see you back in Hong Kong. Jessica Tan, she's Executive Director and Co-CEO for Ping An Group. Thank you also for flying in as well this morning. So let me just start off with maybe, before we get to that, questions about do we have what we take to be the regional risk management center, but maybe we'll start with something a bit more macro. So coming from, let me ask Michael first. Now, the World Bank is you would consider definitely the world's largest sources of funding for developing countries. So my question to you is, and how do you help countries to deal with these economic impact of natural disasters? And how Hong Kong can play a role in that part of what you do? Let's start with some macro topic first.
Yeah, thank you very much. And I want to definitely thank the Hong Kong Insurance Authority for this very kind invitation to speak here. As most of you know or probably learned in school, the World Bank is an international organization. We have 189 member governments. And we have a very, very simple objective, which is simple to say but difficult to achieve, the alleviation of extreme poverty for people around the world. And one of the realities of economic development in developing countries is the extremely high vulnerability many countries have in terms of their economic development to natural disasters. And in working in development, it can be truly heartbreaking to see a country that perhaps has done all the right things in terms of their fiscal management, in terms of investing in education, investing in health, and having many of those development gains undone by a natural disaster that suddenly upends a country's budget. So we are very focused on that issue. Many of our developing member governments are extremely vulnerable to natural disasters of all types, some to all types literally in one country. When you look in Asia and you see countries like the Philippines, Indonesia, where typhoons, earthquakes, volcanoes, all of these things are potential disruptors of economic development. So what we're doing at the World Bank, and specifically my team at the World Bank, is looking at providing these governments access to reinsurance, which of course doesn't reduce a humanitarian toll of natural disasters, but it can reduce the financial toll. So what we do is we write insurance policies, usually on a parametric basis, covering the country against specified disasters. But the World Bank is not an insurance company, and we've not been set up to hold any of that insurance risk. So we can only do that to the extent we can simultaneously place that risk in the market. And we do that to both the capital markets and the insurance market. We place the risk simultaneously. And so when we look at Hong Kong as a capital center in Asia, we're really looking in that capacity is, can we get reinsurance capacity from Hong Kong to help us do our business? And when we are doing business with sovereigns, you can imagine the transactions can be quite large. The last transaction we did was $630 million covering earthquakes in the country of Chile in South America. Quite a large transaction. So we are always looking for more and more capacity. And we were very fortunate with that transaction to work together with the Hong Kong insurance authorities and the Hong Kong Stock Exchange to list that transaction in Hong Kong, which was actually composed of $350 million of catastrophe bonds, which were listed on the Hong Kong Exchange, and $280 million of reinsurance that was placed with reinsurers. So we're very excited about the future of Hong Kong in this area. The reality is that on the capital markets side, capital markets investment in catastrophe bonds from Hong Kong is quite nascent. It's only just beginning. But clearly Hong Kong has the capital to be a provider on both the insurance and capital market side, and we're excited to see that develop.
Okay. Now, I should remind everyone here, the timing of this morning's conference is actually quite amazing. Exactly 1 year, 4 days ago, back in December the 5th, last year, 2022, the Hong Kong government announced a roadmap, a development roadmap for insurance sector. That's a huge commitment. I haven't seen for actually ever. So it was a big commitment the Hong Kong government announced that the roadmap. Among many of the new initiatives, there were the issuance of IOS. They have the, more importantly, is the profit tax concession, among many other things. So I'm going to ask Tony. Now, you are the global risk and reinsurance specialist. Now, are those initiatives and the prospect good enough for you?
Yeah, I think it is. It's interesting, and I was just going to come on the back there of Michael. The world of reinsurance is the world that I live in, and not many people live in that world, but the world of reinsurance really is connecting capital with insurance companies or capital with a risk. And so insurance-linked securities, which Michael talked about, is the capital coming in to protect a country from a natural peril such as earthquake or windstorm or flood. And it's a very efficient tool that if you have an earthquake and it's a certain size, the product triggers and cash flows through to the particular country or the particular company. And so when Michael talks about getting funds to the goal of the World Bank in terms of those who need money, it's an efficient way of doing it. And in the world of reinsurance, there are several centres around the world. Bermuda is a centre where a lot of these bonds are made, and other centres as well. London's got a possibility. The AIF a few years ago, I think, looked at this and consulted with the industry around, could Hong Kong be a centre to be able to transact these? So basically capital with risk. And I think the approach was really good. The approach was connecting with industry to find out what it is that was needed in order to be a successful centre for these transactions. And so the path was created. This year, we've seen 4 of the transactions which have been conducted in Hong Kong. There's an incentive program which is important because I think along with initiative, sometimes you need some way to incentivize a change in behaviour. It's very easy to go to Bermuda every time and get the bond done. Why don't we look at Asia? Asia's very important. There's capital in Asia because from an investment perspective, it's interesting. The returns from these cat bonds are pretty good returns because if the event doesn't happen, you get the investor gets a return on it. And the law of large numbers, half of them happen, half of them don't, and there's a return. So from the investment community, it starts to attract something which is very good from an investment community. So Hong Kong, with huge amounts of investors locally and globally, now have another area where they could invest in terms of diversification of investments. So that's a good step forward. You've also then got risks, such as what the World Bank did, is bringing them to Hong Kong to transact. That's a good step forward too. So now you start to create an ecosystem around this area, which we call insurance-linked securities, where you have services and you have capital and you have risk being transferred in Hong Kong. So you start to create an area where you have a viable business. It takes an incentive in the beginning to build it out, but as the industry builds around it, so does the viability of the ILS as a centre. And once you build something like an ILS centre, of course you can build other things on the back of that. In the world of reinsurance, you can build other transactions which occur. So to me, looking at that transaction, looking at the way the IAA stepped forward, it was easy, I imagine, at certain times along the path to step back and go, no, this is too difficult, probably from a government and an IA perspective, but persevered, and then we have seen these transactions. It will build. This area of transactions called ILS is growing globally, and you can see that Hong Kong is a good centre for that. It's got the framework for it. It's got the regulations for it, and what will build out will be the services areas in relation to that in terms of this financial product. So my summary was, it's a good example of how we can move forward and build out success.
Great. Thank you. I'm going to turn to Kevin. So first, I need to disclose an interest because my company has been working with your company, Kevin, for quite some time. So let's make sure I get that disclosure out. But you know, you've been in your position. I mean, you've been with Sun Life for 20 plus years. And amazingly, Sun Life been in Asia, in this part of the world, for 130 plus years. Now, you must have seen all this ups and downs in the markets, right? In fact, I don't understand why your head office have that foresight 100 years ago to come out to Asia. Now, of course, now it's no-brainer, but with all the so-called dual circulation and GBA, Greater Bay Area, how do you see the future for your company? I guess you're not going anywhere, but where do you actually feel the prospect the same, perhaps even like 2 years ago? Because the dynamic have changed. The economy is a little bit weaker today, but are you still as hopeful as your company has always been for over 100 years?
Yeah, well, we're a 158-year-old company, so we've seen a lot of things that have happened over the years, and of course we've been in Hong Kong for 130 years, and it's not just we have a strong local business here, but it's our regional presence, and there's a number of reasons I think we'll get into later of why we love Hong Kong as a regional center. But if you look at the industry today, if you're asking about the industry today, there's a couple of very large macro trends that are happening to the insurance industry. And they all relate back to our purpose as a company, which is helping clients achieve lifetime financial security and live healthier lives. And if you think about lifetime financial security, you need life insurance, health insurance, wealth. And healthier lives is in getting into the health side. And those are two things that I see macro happening in the life insurance industry. You're seeing more and more life insurance companies that are also becoming asset management businesses. And we talked about this earlier. Sun Life's the top 15 life insurance company by market cap, but we're also a top 25 asset management business if you look at us by AUM. And about almost, it's down a little because equity markets are down, but almost half of our income comes from asset management and wealth, and half of it comes from the insurance side. The second thing that's happening is increasingly we're moving into health. And we're doing more and more on the health side. That is a little bit slower happening in Asia, for us anyways. There's a few companies, Ping An does a really good job on the health, and so does one of our competitors here, AIA. It's an area that we're growing into. And one of the interesting things is Sun Life now has 3 or 4 different experiments where actually providing health care. And I know that that's happened in China, but it doesn't happen in very many other markets. We bought Canada's largest virtual care company this year, and it's an interesting extension because we've been a payer of benefits. We had started to hear from our clients they wanted us to help them find healthcare, to navigate the healthcare system. They wanted us to do more on wellness because we knew so much about them. But increasingly now they're asking us, can we actually provide healthcare? And so the transition into that. So you're seeing these macro trends where more into asset management, more into health, and of course more on the digital side where we're thinking and acting now like a digital company, and that's a very different thing. In the past, insurance executives needed to know. A lot of times they were actuaries. They needed to understand risk. They needed to understand product. They needed to understand distribution. But they didn't have to understand technology, and increasingly now we have to understand technology. So that's also bringing new competitors, right? So you're now seeing asset management companies buying insurance businesses for the cash flow globally. You're seeing fintech, health tech, insurtech get more pervasive, and so those are sort of the macro trends that we're looking at, and I think they're going to add a real resilience to our industry. I think the extensions, the being very client focused and becoming more digital are going to be really important.
Well, more digital. So before I going to ask Jessica this question, let me tell you all a story. So way back in around 1999 or 2000, I was then the representative for the insurance industry in Hong Kong. So I was invited by Chairman Ma of Ping An, together with the chairman of the Federation of Insurers in Hong Kong. The two of us, we were invited to Shenzhen 20 plus years ago. We went to visit him in the Ping An office, Futian, I think is that correct? Lohu, whatever. Anyway, so it was a very friendly meeting, a lunch, followed the lunch, and Chairman Ma showed us the technology at the time. I think he has a satellite broadcasting room, and so on and so on. I came back to Hong Kong. I was like, oh, that's okay. I wasn't that impressed. And boy, how much I regret today. If I would have invested the stock then, I won't be here talking to you now. I will be residing in Bermuda somewhere. But boy, did we ever see that coming? Now, how much it's been, not just insurance, it transformed the entire financial industry. So maybe it's still not too late to invest in your stocks.
Well, you should come and visit us now again in Futian.
So anyway, I'm just, my question for you is obviously, is proven back then, 20 years ago, when I was being told about all these, I thought, yeah, wait till it actually work. Now we all believe it's working. So my next question is for you is, how much more how much this fintech can actually drive those changes, especially to empower the risk management business? Can we use that, we use AI or whatever, to actually improve the risk management business.
Yeah, thank you, Bernard. I do sincerely invite you to come again. I think indeed technology has actually increased, I think, the potential a lot. I think Kevin talked about it. Well, first, before I go into the topic, I do want to say that I think what Stephen and Clement, this Asian part, I think we're in the right place. I'm not just in Hong Kong, but Asia. It is a increasingly complex and uncertain world. I think Michael can speak a lot to that. But I think Asia is one whereby I think for the insurance industry is just full of promise, right? Because this is one of the few areas that is still high growth area. If you looked at any of the, I think I saw Clement's remarks a month ago at the FinTech Festival, the percent of risk that's not insured is the lowest. And if you looked at actually even growth in premiums, I was actually shocked. If you look at the past 20 years, the growth in premiums is actually only 1/3 that of the GDP growth in Asia. Right? So it's very uneven growth. So there's huge potential for that. In terms of where technology can play, I wanted to offer two ideas for everyone to kind of consider. I think one is, as Bernard said, in terms of distributed ledger and AI. Both Michael and Tony talked about Hong Kong's kind of strengths as capital markets and how you can actually, for reinsurance, redistribute risk and get different capital providers. I think using technology can help to accelerate that. Right, particularly for some of the newer risk, right? You talk about actually climate risks, environment, ESG being a very important one. It's very complex. I mean, when I studied comp science in school 20 plus years ago, environment risk was one of the more difficult aspects to model, right? It's just like macroeconomics. There are a lot of factors to that, right? And today, if you coupled in with all the geopolitical aspects to the different industries and different environmental and sustainability growth, actually it's even more complicated. And I think this is where I think AI, particularly with large language models, and you can take in different types of, unstructured data, actually can build that. We talked about in the insurance industries over the past 20 years about building risk analytics hub, right? But I don't think anyone has really done that. And I think this is actually a good opportunity, particularly I think with some of the initiatives we're talking about sharing cross-border data and then being able to build that models here. And I think a lot of us here, which have Asian operations, will very much like that because I think that's the first step to having the transparency to better understand and therefore underwrite the risk. So that's one aspect. And the other area, I think, is in the distributed ledger area, which has been done. You talked about ILS and smart contracts. Increasingly, if you talk to most reinsurance contract is a wholesale. It's a B2B deal. It's a wholesale deal. You don't really get through to the bottom. We've tried a lot as a primary insurer in China. For example, in agriculture, in environment liability insurance, with Shenzhen, for example, we've worked with them to build a end-to-end monitoring platform, whereby we go down to the individual corporates about what type of pollutants they're actually polluting to the air, to the water, to the soil, and then we can do liability insurance much better. Agriculture as well, right, because we're talking about individuals. So then we can go right down. It's a much more efficient way of distributing risk down to that. In the financial services sector, people have done that, frankly, for loans. Right? We've done, distributed ledger, smart contracts down to SME loans to, thousands and hundreds of thousands of that. And I think that could perhaps be a new way and a new business model that the insurance Hong Kong has done virtual insurer, but that's primarily to see. If you can do that in the reinsurance, it could almost be like a direct reinsurance hub, if you will, and actually try to bring the ecosystem better together, right? So I think that's one area which I thought could be interesting. And then the other area is actually what Kevin said. I just wanted to build on that, whereby I think you talked about life and health, which we do a lot of. There's also things about, I know Clement earlier was doing the cross-border car kind of place and stuff, which can be coupled with value-added services. The past week, I had the pleasure of bringing my family across the three areas of Hong Kong, Macau, and mainland China, and lots of the infrastructure still needs to be worked out. With different cars, I have to change couple of cars, different payments. And it's not just, I think insurance is only one aspect of the ecosystem, right? If we can use technology to interface these services. So one of the things we're trying to do, besides offering the cross-border car insurance, is actually couple with some of the services for the car owners if they go across the border, right? If you need repair shops, if you need to top up your fuel and stuff like that. And I think there's a lot of potential for that, I think, in automobile and health for the citizens moving across Greater Bay Area.
You know, 20 years ago, I was at your office. I think it's the same office. And I was also told a lot about ideas. I didn't pay much attention. This time, I'm going to pay a lot of attention to what you said, because I'm sure it will actually happen. It will happen. So thank you. Now, I've been reminded that this has to be a very interactive morning. So each of you, and as a participant as well, you will be asked a question. So please join in, so because we don't want to just leave it to the five of us here speaking. So we're going to do a live poll. Same question that we'll be asking you will be, what needs to be done more to strengthen the role of Hong Kong as a risk management center? So please, here you are. Can you see it? So these are the 5 different areas of, you can pick one, which you see is the most important. Please do. Okay, so please take part in this. And do I wait for the result, or can I just continue? It's locked. Here you go. Can you get it? Please do take part, because this will provide me the questions for panelists. Do you get it? Any problems? Okay. See, they should have hired Ping An. This will be instantly done. Okay. While we're waiting, why don't we? I'm gonna move to ask our panelists the same questions too. Now, here we are. I start off earlier asking, do we have? Does Hong Kong possess what needed to be the risk management center? Oh, here we are. Coming. Sounds like, it looks like it's the last one coming at the top, or close to it. No. Anyway, close enough. Anyway, not surprising. Attracting talents is definitely also one. I think we all can all agree. For us to be a risk management center, it's all come back to people, talent. So let me ask some of my panelists, especially those who are not familiar with Hong Kong, with this region. Please, anyone would like to have a first start on this? Do we have what we take to be a risk management center? Tony, sounds like you're ready to go.
It's a great question. I looked at each of the sort of 5 responses there, and to me, having a brilliant infrastructure is certainly, and that's interesting. That's key, because a great infrastructure, ability for a company like mine to be able to come in, move about, and build a business is critical. I think a stable environment in terms of regulation and governance is also very important. Companies like to know that we're certainly stable there. I think also the talent is key, and that's a nice place to live. It needs to be a place which is attractive to bring people of different backgrounds to build on our businesses. And I think that is also key when I think about a business. So then when I overlay that with Hong Kong, many of these things, the 3 or 4 things that I talked about there in terms of what I think are key hubs, and you see these dynamics, and I'd relate to another hub, which would be Bermuda, in terms of a similarity which it has these traits and it attracts talent, nice place to live, it's got stable regulation, and it's good proximity to markets. So you see similarly with Hong Kong has all those traits. In relation to the talent, if I think about that, that's something which is still emerging for me. So Guy Carpenter, we have our regional headquarters based in Hong Kong. We have it here for a reason. We have it here for the reasons that I just talked about before. And talent, I guess, when we've just come through the period of COVID, it takes a while to rebuild that. Couple of ones, just talent mobility is something which has changed. We had sort of talent immobility, shall we say, for the last 2 or 3 years where we're sort of stuck in our places. And we're going through a phase now where talent, I think, is starting to look around again and going, where is it a good place to work? Where can I continue my career? And so I think that in Hong Kong for the insurance and reinsurance business, we're still building on that. I think that, don't forget, the foundations here are strong. There's a strong, you've got 2 large reinsurance regional companies headquartered in Hong Kong, established in Hong Kong. You've got insurance companies here, you've got life insurance companies here. So there's a good base of talent within there. And to me, it's building on that to bringing in international ideas and international people. But the bonus also we have is a huge talent pool very close being China. So that's a real advantage for Hong Kong and having that talent pool close as well. But I think just for my business, we're still building on that to attract people to Hong Kong. And it's only a year into it, but I see this as quite key because the talent that comes in, I think quite frequently can bring new ideas, initiatives, and the skill sets that we're missing. I think that the talent here, we've got skill sets to run an insurance business and a reinsurance business, but if we talk about ILS, it's different skill sets. So that's the sort of talent we're trying to bring in different areas. And one of the ways forward, I think, is talent brings these ideas, works with the IA, works with the government to try and build new areas. So mobility is coming back, and we just got to build on it a bit more if I look at Hong Kong.
I'm going to turn to Jessica. Tony, you're a very good diplomat. You'll be very kind to us. You purposely did not mention Singapore, so that's been very kind of you. So I'm going to turn to Jessica. So now, do we got what, how we fare comparing to other cities in the region that we are competing with? Because Tony mentioned Bermuda. Yes, that's not exactly in the same region. So what's your take?
He was the diplomat one.
Yes.
So I think it's very natural. These have been natural, friendly competitors for decades. I think the advantages and I think are different. There are, well, from an infrastructure standpoint, I think both are excellent. Excellent. I spent my past 10 years, at least 1,000 flights between Singapore and Hong Kong airport, and both are excellent. They're excellent. Actually, I enjoy Hong Kong airport a little bit more. My husband works in Singapore airport, so he always complained that, I have a bias. But I think in terms of when we talked about this ecosystem, I actually think that Hong Kong has a bigger advantage. Right, and I know there's media today, so I'm actually publicly saying this, because I think for 2 reasons. I think one is that if you want to build ecosystem, you have to be near a large captive market. And I think proximity to mainland China is a huge advantage. I mean, I'm born and grew up in Singapore. Singapore's, it's close to Southeast Asia, but it is not a single homogeneous market. So it's a lot more difficult, right? To do the same thing there for Southeast Asia would be 10 times more difficult than if you were to do it just for mainland China. So I think that's one advantage that Hong Kong clearly has. I think the second advantage is actually in terms of talent. I've worked in all countries in Asia. The past 10 years in mainland China, it's been fantastic. There is no worry about hiring people. Right? You get talents not just from technology, data scientists, actuarials, anyone. And the most important thing is the entrepreneurial spirit. So if I were to think about what Hong Kong can do better, because we also have units within Hong Kong, and I was a little bit surprised that I don't find the same level of entrepreneurism and the access to talent that I would otherwise have thought is just cross the border away. I mean, it takes me 1 hour from, in Futian to get here. I think while there are some policies, I think it's good that this year there's some, talent policy whereby it makes it easier for talents to kind of work here and there. I think much of it can be done. I think, taking advantages of that, as well as I think some of the, it might not be politically correct to say this. I say this in Singapore too. Singapore also lacks the entrepreneurial spirit. It is the kind of can-do attitude that in China, any one of us who've worked in China, there's a bit of, uncertainty, the ability to deal with uncertainty and then take risks and say, okay, let's try it out. And I think in more established cities like Hong Kong, like Singapore, that entrepreneurial spirit is a little bit lacking. And I think it's something that actually could benefit as we bring different people from cross disciplines and country together, and I think that will make actually Singapore's, Hong Kong's vibrancy much more.
Kevin.
Yeah, I was going to say, boy, I think the entrepreneurial spirit in Hong Kong might be greater than Toronto, so hopefully the press doesn't cover that. But anyways, I think there's a couple of things. One, if you think about, there's 3 groups of potential employees for companies like Sun Life in Hong Kong. There's people who grew up in Hong Kong, and there's an incredible education system, and there's an incredible understanding of both the West and of mainland China. And, many of our staff that are from Hong Kong speak perfect English, Cantonese, and Mandarin, and they have that balance of understanding both, and there's a resilience to the people of Hong Kong. So there's a great education system, and many go globally to get educated and then come back and have that global perspective. The second group is increasingly mainland Chinese employees. And what I see is, and I've got a number of friends who had met in mainland China who've now moved here. Oftentimes they were educated at Columbia or a CFA or they've done really important things in mainland and are moving here. And that's a great talent pool. And then the talent pool of expats coming in. And there's a number of reasons that this is a great place for expats to live. The airport is fantastic. It's easy to get in and out of. It's great community. It's really easy to, I lived here for 5 years. I loved living here. And we have no trouble getting expats to come to Hong Kong. So you've got those 3 groups. And then on top of that, you've got all the top insurance companies and all the top banks walking distance away. And most of them have their regional office here, not in Singapore. And if you think about that training ground, it's an incredible training ground for people to learn this industry. So I think that you can't underestimate the impact of having all of those centers here in Hong Kong, because it's a draw for people. It keeps the Hong Kong people here. It attracts people from mainland China, and it attracts people from the West to come and work here because it is an incredible training ground and an incredible way to learn. When I come from Toronto, I can pretty much walk to all of my biggest competitors in the world and meet with them. I can pretty much walk to all of the top investment banks we work with and meet with them. So there's a real advantage to that core of understanding.
All right. So, Michael, now, in addition to that, questions, Hong Kong government has focused so much on the green and sustainable finance. That's a huge commitment as well. How do you see that? Is that an additional competitive advantage for us? Being so-called the risk management center, can we continue to play on that?
Yeah, and I would just also make a plug for the first answer, government incentives, the importance of government incentives, because, again, what we're doing in this market is we're ensuring governments, and in many governments in the world, it takes real courage to execute insurance transactions. Because if you think about an insurance transaction, you're paying for something, and whether you get anything back is uncertain. And there are places in the world where you do that, and a government changes, you can be going to jail for wasting government resources. It takes real courage to do these transactions. And government incentives, things like what the Hong Kong Insurance Authority has done to incentivize ILS transactions in Hong Kong, which is essentially providing a grant that pays most of the transaction costs for a transaction, make a very real difference in whether a government's willing to go forward with one of these transactions or not. So I certainly don't want to play the role of someone with a begging bowl here in terms of focusing on government incentives, but it really is important, and it really is something we greatly thank our partners at the Hong Kong Insurance Authority for, because it makes some of these transactions possible. Now, in terms of green and sustainable, definitely there is more and more pressure throughout the asset management business to green and make more sustainable their portfolios. And the insurance-linked securities investment managers are not exempt at all from that pressure. And we see there, we reap the benefits of that very much in our World Bank transactions, because the World Bank transactions, we're insuring developing countries, so that has an immediate sustainability aspect. And also when we do transactions, to the extent we're holding capital, investor capital, like in an ILS transaction, we're putting that capital to work for developing countries through our regular processes. So definitely, being able to attract more capital is facilitated by green and sustainable labels that we can use on our transactions. And I think, to the extent that those are also picked up by Hong Kong investors, that'll be a big benefit to us.
Right. All right. Now, we're going to turn into a more interesting session, Q&A. Now, thanks to you all, I already got a bunch of questions here, and not entirely friendly sometimes, but that's good because you can spice up the audience as well. Why don't I take the first one? The first one sounds like we've all been saying nice things to Hong Kong, right? And all the positive things. Now I'm going to ask you, what are the challenges? What more need to be done? Right? I mentioned earlier, from the regulatory side, from industry, as well as the policymakers. What more can be done to help to maintain that momentum? Right? Anyone want to take the first bite? As Michael put it here, you will not go to jail. It's okay. This is our DNA culture. You can offend us, and you won't go to jail.
I might start with a quick piece, and we were at InsurTech Insights, which Invest Hong Kong sponsored and the IA sponsored, and Clement was speaking there yesterday. Around the world we see ecosystems. Singapore is actually doing a very good job of this, where they've created universities and companies interacting together as an incubator for InsurTech, FinTech, Health Tech. And I think that's a place that Hong Kong's, the IA's created some good regulations for digital insurance, and we're very happy to be working with Bowtie here. It does create learnings, but I think there's a real need to find ways to help incubate that. And we've been talking to a few startups here, and they'll tell you it's a little hard to get capital. And so if you think about Silicon Valley, there's a very mature system for getting capital to fund some of these startups and more interesting companies that help us on our journey of helping our clients. So I think that concept of finding ways to help startups in those sort of InsurTech, FinTech, Health Tech industries would be really valuable. The other thing I want to say quickly, because I have the chance, and is I do think to be a global hub, the peg to the U.S. dollar is pretty important. It actually helps us with our investments. It helps us to sort of do different things with this as a regional hub. So I think maintaining the peg to the U.S. dollar is actually quite helpful to Hong Kong.
That's going to be the soundbite for the media. Okay. Who's next? Michael, you want?
Yeah, I mean, in my mind, it's developing the investor base here for insurance-linked securities, because that is, they should be a natural in Hong Kong. I've been issuing bonds for the World Bank for 24 years. And we always hear a typical World Bank bond, of course, is a AAA bond. It's quite safe, it's quite liquid, it doesn't pay very much. And we always hear Hong Kong investors, they need high risk, high return. You know, don't bring your AAA securities here. We want high risk, high return. And cat bonds, ILS, offer that. They offer high returns and enough risk to tantalize even a Hong Kong investor. But we haven't seen yet that development in the investor base. So that, I think, is the big challenge, is the investor education needed to bring Hong Kong investors into this area.
So we should rebrand it, not cat bond, high risk, high return bond. Anyone else, Jessica or Tony?
I think my sort of view is the confidence of the global companies to expand and grow in Hong Kong. It's still early days, really, from the COVID period. So it's continuing to build in that confidence with stable environment, which Hong Kong has. So continuing along that path of stable environment. I think and I agree with Michael, I think there's a great platform here, and I think some of the incentives will still be required to develop into new areas. And I think that's a place that I know the IA continues to look at. But as I look at global hubs, so I look at Singapore, I look at Bermuda, I look at Dubai. Dubai is relatively a new player as well. In the world that I live in, that finance can move quite quickly, reinsurance can move reasonably quickly. Where you're located is reasonably dynamic, and you're looking for these environments such as Hong Kong. And so I think there's still some requirement to incentivize new areas of development. I think about things like parametric solutions. So this is where you get these triggers based on natural perils. And then I agree also in terms of the ecosystem here. When I talk about investment and development, it's building that ecosystem out. It's the skill sets to do these financial transactions, and they're normally more complex and different. And we build that base here, and it will be similar to other areas in terms of these transactions. But it will take two things. One is the regulation to be friendly and proactive and helping set these businesses up, and then secondly, some incentives to encourage them to come here. And then once you get the balance right, it just grows. That the incentives fall away a little bit, and you pivot to another area. So they're the places that I look. And I think Hong Kong's and it's great to have a conference at this time. It's sort of a pivotal time in the way that I see the dynamics of the world. I think it's a pivotal time for Hong Kong. And so I think it's good to have these discussions around it. And so that's what I would see in terms of the challenges and the opportunities, I guess.
Jessica?
One suggestion, I guess, to accelerate some of the opportunities we talked about, if there is some sort of cross-authority kind of collaboration, or to make it easier to push along initiatives. I think some of the things we talked about, particularly in sustainability, actually cut across multiple sectors, if you will. We talked about sustainable financing. There are, of course, there's the insurance aspects, the guarantees, which will cut across several domain areas. And I think Hong Kong is doing it. For example, there's the voluntary carbon markets, I think, that was being launched. There are various efforts, ESG standards, etc. So if there is some way whereby I think, some sort of task force or initiative or a sandbox that is cross kind of authority, that might actually help speed up some of these efforts, yeah.
Well, policymakers are here, Selena's here, and SFC chairman is there. Anybody from HKMA? I'm still looking. Over there? Okay, yeah, so we hear you, all right. Now, let me get to the next topic here. This is a very important one. Seems like everyone is asking that question these days. So from the audience, in view of the rising numbers of cyber attack, and there seems to be a huge protection gap in cybersecurity risks. What is your view on how Hong Kong can capture this opportunity? Now, not everyone has to answer this, right? But anyone who know about this topic? Well, is that you, Jessica?
Yeah, well, I think it's very difficult.
Or Tony?
Because there are a lot of exogenous factors to cyber attack. I think very few of us are able to underwrite that risk very precisely. But I think the opportunity is more in terms of perhaps understanding because I used to be our CIO as well. So it takes a lot actually to ensure that, particularly in these days, that you actually have a robust enough, but to me, that nothing is fail-safe, right? So I think perhaps the opportunity is more of, I think Clement mentioned this in one of his speeches before, about the insurance plus actually the services aspect, right? It's much more about how do we help build the capabilities to help a lot more of our clients be able to withstand many different layers of it. And I think that perhaps would give us a lot more comfort in actually being able to understand the level of vulnerability and therefore have the first step to being able to underwrite that risk.
Underwriter.
Underwriter, yeah. So I can talk about it from an insurance reinsurance perspective. So cyber is we talked about insurance-linked securities. Cyber is another new class of business. So we buy property insurance and casualty, and cyber in the United States it's a $1 billion business. Huge amount of cyber insurance is purchased from you and me. Personal line cyber, small business cyber, and corporate cyber. So there's multiple levels of it. And globally, this business is growing enormously. In Asia, it's relatively small. In Hong Kong, I imagine nobody here buys cyber insurance, perhaps. But it's an area where London, in particular, is building up businesses, MGAs, for example. Opportunity, once again, MGAs out of Hong Kong, to write cyber and develop and grow cyber. So another area perhaps that could be of interest, you look at MGAs who sell and it's a specialty line of business, cyber insurance. And then on the back of that, of course, you need the infrastructure, because when you settle cyber claims, it's not like car claims. I think it's quite complicated in terms of, to say the least. And so it's an area of business which will grow exponentially, guaranteed. All of us will buy cyber because we'll be more worried about someone breaking into our house and not even being there, or stealing your identity, or lots of other things. And I think Jessica could probably talk about the cyber risk. But the insurance and reinsurance opportunity, yes, it exists. And in America, it's a $1 billion business. In Europe, it's growing. In Asia, it'll grow. It's an opportunity. Could Hong Kong develop something in relation to cyber products? I imagine in the next 5 or 10 years, it'll come pretty quickly. And companies that I've seen grown in that space have grown exponentially very quickly. So it's an area, once again, you look at it and sort of say, okay, could we help build entrepreneurs with the knowledge and the expertise and bring them in to build cyber expertise for Asia Pacific, for example. It's an underdeveloped area.
Okay, yeah. All right. Okay, next question from cyber now to... Oh, I think they deleted my questions. Not my questions, the questions from the floor. Anyway, I remember it was about climate risk. So from that, do we have enough reinsurance facilities to deal with this rising climate risk? Anyone here? Sorry, the actual question's been deleted from my iPad, so I paraphrase it.
I think... So it's climate risk we're talking about. You may want Michael, you can talk a little bit about it as well. But the climate risk is growing clearly on a global basis, and with the I think you've just come from COP24, so you've got background until 23. So I think there's a lot going on in terms of the climate space. If I look at Hong Kong, we've had the heavy rain that came through, a few months ago. Amazingly enough, the actually insured loss was relatively small compared to others, shall we say. But you've had floods in China, you've had a number of events which are occurring more frequently, shall we say, and a different style of loss. So in terms of the reinsurance market, the reinsurance market is going to have to adjust and build out its capabilities to be able to manage the style of risk. And I look at developing or emerging companies in Asia Pacific, many of our neighbours here. They get a lot of natural perils coming through. So this initiative around the insurance-linked securities, which is, so for example, the cat bond that was done in Chile or the windstorm event, if there's a rain, for example, in Hong Kong and it gets to a metre, or a metre is an exaggeration, but it gets to a certain point, it triggers the bond and you get the cash payment. These style of products, and it's another word I use is parametrics, which is this trigger concept, I think will continue to become more and more important because the traditional form of catastrophic reinsurance is there for the large events, but these other events we're going to need more capital. So the reinsurance capital is a very large market. The other market which we tap into is the broader investor market in terms of capital. This is the market, I think, which will continue to grow. This is a very strong market, a very strong play for Hong Kong. So I think that as I think about how we deal with the increasing frequency of natural peril events, I think these sort of products, which are going to be very important, and you're seeing the World Bank's promoting these wherever possible as well.
Maybe I would just say, a big issue with climate risk in this market, or at least the market I work in, is are the models keeping up, right? Because if a government is insuring based on a 5-year-old model, does that model properly incorporate the current conditions in terms of both probability and potential loss? And it's also makes it more important to continue to think about increasing the capacity, the amount of insurance a government takes, because what we're seeing, at least in sort of the hurricane space, is it's unclear, I would say, whether frequency of events is increasing, but it's definitely very, very clear that the losses caused by events is increasing. So you have things like hurricanes, which are picking up much more water from the oceans because the oceans are warmer and dropping a lot more rain, making the losses much higher. So there's a continuous need both to update models and to update amounts of coverage to sort of keep up with how the climate's adjusting, and that's just another challenge that governments have to deal with.
Yeah.
Bernard, I might take almost a flip side of this. One other thing that regulators can do, and we're talking to regulators around the world about this, is insurance companies, life insurance companies, have long-term liabilities, and so we need long-term assets to back those liabilities. And renewable energy and infrastructure is an incredibly good asset to back it. And we've built capabilities now to actually help build infrastructure. We've got some renewable energy funds that we're building, but by and large, regulators still have very high capital charges against these. And it actually doesn't encourage this natural fit of building renewable energy. And I know this is a big commitment of governments around the world. And so I think creating that alignment will actually help with building renewable energy. And so that's one of the things we do talk about, is looking at the capital charges that relate to those sustainable renewable energy and infrastructure investments.
All right. Now, you must be wondering why I'm not closing up this session, because it's 11. But apparently, they changed the time on me. So that must mean that we are now in a holding pattern. That we have to. So I have to come up with more questions now. So I'm going to turn to Jessica. Sorry, we have to fill in the time. Anyway, no, but seriously. I always see the role of Hong Kong under the one country, two systems. We're here to add value to our country, to our motherland, to mainland China. In providing that platform, we have the onshore and the offshore components, right? For a company like yourself, you clearly you have the onshore components, but you also easily can build the offshore component. How do you see the opportunity? Because I seriously think this is where the Hong Kong value comes in, right? They're on and off. It would be great you can have both, but even without the onshore, but clearly we can provide the offshore services. How do you see a company like yourself taking advantage of Hong Kong?
Yeah, it's a great question. Actually, I think we should and could do a lot more. I think from two areas. I think one is we are very much a retail company, right? We serve 229 million, the last count, customers, many of which are in southern part of mainland China, and therefore this integrated kind of services, I think both in terms of insurance plus health insurance plus actually automobile services is one area which I think is a natural extension for us, and we would love to do that, serving our customers on both sides of the border. I think and I think this one is not just, I think, working with the insurance authority, which IA has been extremely helpful, but also across with some of the other initiatives, I think, because this is a whole infrastructure and you follow that. The second one, actually, I want to build on what Kevin was saying. Actually is on the asset side, right? Because both of us are both large life insurers, and in the investment aspect of the portfolio, as evident by the past kind of 2 years of fluctuation, is extremely important. And I think there's a lot more that, kind of Chinese insurers like ourselves actually can take advantage of Hong Kong as an international financial center, right? Particularly, I think with you cross the border and the interest rates basically has a change of 3 to 4%. I go to the bank branch in Hong Kong airport, and immediately, I get a few percent more. We could actually take advantage of that a lot more, not just, I think, in the alternative assets, but even in the capital markets. And I think we have, of course, like Stock Connect, Bond Connect, etc. And one of the ideas I've been speaking to various folks is, could we have an asset management connect of some sort for insurance? I think China that would actually bring a lot of our Chinese insurers like ourselves actually, be much more integrated and take advantage of Hong Kong as an international financial center.
Okay, Kevin, help me. We have more time.
The time went up again.
Another 5 minutes, okay.
It's as if I didn't spend any time at all.
Jessica added time.
No, but seriously, the onshore, offshore, I just want to hear from you as well.
It's interesting, and I think that the IA does a great job with this, and I would say to continue to encourage it, is the relationship you're building with other regulators. And the relationships you've built with regulators in China, the relationship you have with our regulator, OSFI in Canada, the relationship you have with regulators in the ASEAN countries, that's actually really important for our dialogue that we have with regulators in other places. So us having a strong relationship, regional office here in Hong Kong, a good relationship with the insurance authority actually allows us to create better relationships in other parts of the world. So I would just say that that's an important piece of Hong Kong, having that global view and also creating those relationships with other regulators.
Okay. Michael, I'm going to turn to you. Now, given that Hong Kong has gone through a very tough 3-4 years. From the 2019 social unrest, followed with 3 years of COVID, and you're based in Washington, D.C. I'm sure, given the geopolitical tension everywhere, while you're here, you're saying how great Hong Kong is, how much, prospects we have here. But back in D.C., how would that dialogue be like? Putting yourself as a World Bank person, do you find yourself have a hard time convincing others in what you believe? Because you lived in Hong Kong before, and you come back, you see it for yourself. So, but when you go back to DC, how successful you think you can to actually help to deliver that message back to your colleagues?
Yeah, well, World Bank is an interesting place because we are a place where voting at the World Bank, influence at the World Bank is based on shareholdings. And our number one shareholder is the United States. Our number 3 shareholder is China. And there'll be a prize later for those who guess the number 2 shareholder. But we have, within our top 3 shareholders, both the United States and China. So it's a place really of where we see great collaboration and spirit of working together between all the governments, but including between China and the United States. So I think if anything, the World Bank can be an example of how some of these geopolitical tensions don't have to leak into rational decision-making about things like development policy. And I would definitely say that, at the World Bank, we recognize, the absolute importance of Asia, both as a capital center and frankly, as a risk center, because of the fact that when you're talking about the natural disaster space, something like 60% of the world's natural disasters happen in Asia. So it's not difficult. It's not difficult from where I sit to get senior management to want to be actively engaged in this part of the world.
All right. We have a question from the floor. Oh, so Selena, maybe can someone can you pass the mic?
Thanks for
Selena.
Jessica's suggestion. Actually, we think alike, and I would just like to give a response, and that it is a very positive one, because we have actually set up an interagency steering committee on all the green and sustainable agenda. That includes us. I'm from the Financial Services and the Treasury Bureau, and also the Environment and Ecology Bureau in Hong Kong. So we are working together, pulling in also all the financial regulators in Hong Kong, IA, of course, included the Hong Kong Monetary Authority, Securities and Futures Commission, as well as our Accounting and Financial Reporting Council, because we are working on things like taxonomy, because we need a very good common standard for the classification of it. We are working on dissemination on information for data, so that all enterprises can work on their risk modeling, as was included in one of the answers. And of course, disclosure, because the ISSB has just published their latest global disclosure standards that will apply to everyone. So we are also working with the Hong Kong Stock Exchange or Hong Kong EX on the rules for the listed companies here in the room, and then perhaps later on for all. And that I see Winnie here working with the AFI and also working with the accounting body. So that is a bit long answer to your question, but that's an excellent point, and we are following it up very specifically. Thank you.
All right. So, see, ladies and gentlemen, that's called efficiency. We have an immediate response from the authority. Fantastic. Well, we've successfully bought enough time for our guest of honor to arrive. So we're going to end this session. But ladies and gentlemen, please, a round of applause to our panelists. Thank you very much, ladies and gentlemen.